Am I audible now? Can you please check? Okay, so once again, good afternoon, everyone. And today we are going to do the most important part of your accountancy, that is making your final accounts. Final account comprises of three things. First, your trial balance, then your trading and profit and loss account, and lastly, your balance sheet. So it has three things which we are going to do one by one. First, we will focus on trial balance, that how to prepare a trial balance. Then we are going to make a trading and P&L account. And lastly, we are going to do the balance sheet. Okay, so in the last lecture, I have given you some journal entries which cover a very basic thing. Am I audible now? Can you please confirm, everyone? Yes. Okay. So in the last lecture, we have given you some basic journal entries which covers all the basic part. For example, first entries for the introduction of capital in the form of cash, bank, furniture, land and building. Now, everyone who is listening to me right now, you have to say with me that what the journal entry we will do just by reading it. Now, it is mentioned that introduce capital in the form of cash. That means cash account debit 60,000 to capital account 60,000 because it has been introduced by the owner. Okay, then we have bank balance. Bank balance 1 lakh introduced as a capital. So bank account debit with 1 lakh to capital account 1 lakh. Third, we have furniture. Furniture brought in as a capital. So furniture account debit with 40,000 to capital account 40,000. And last, land and building brought in the form of capital. So land and building account debited to capital account. So these four accounts we did a combined entry, that is cash account debit 60,000, bank balance 1 lakh, furniture 40,000, and land and building account debit 2 lakh rupees to capital account. Total of all these four items, that was rupees 4 lakhs. That was your first journal entry that we did. Then we did the ledger posting as well. Whatever is in debit, we have to write on the debit side of the ledger, and whatever is on the credit, we'll write on the credit side of the ledger. Then we have another entry where they ask for purchased goods of rupees 30,000, 1/3 payment made upfront, that is made in cash, and 2/3 due after 2 months to Mr. Y. So if I purchase the goods, the purchases account will be debited by 30,000. 1/3 was payment was made upfront, so to cash 10,000 and the remaining amount to Mr. Y, who will be our creditor, rupees 20,000. That was your second journal entry. Third, sold goods to Mr. X, rupees 90,000. That will give you your. Can everyone confirm once that I am clearly audible? I think some of the students are facing some issue. Yeah. Okay. So the third entry was sold goods to Mr. X. Mr. X has not paid me amount, so I will debit Mr. X by 90,000 and credit the sales account by 90,000, resulting into my debtor. Then we have rent paid of 20,000 by check, and 50% of the rent belongs to the next year. So what we did, rent account debit with 10,000, which is the cost of the current year, prepaid rent account debit with 10,000, which is the cost of next year, to your bank account because it is paid out by check, to bank account, that is 20,000. Okay. And lastly, we have salary due but not paid. So salary is an expense. Salary account debit 25,000 to outstanding salary rupees 25,000. That was all done in your last class. Next, what we did, we tried to post it into each of the ledger accounts. So if you have your copies in your hand, you can check your copies. All the ledger postings are completed for the last class. Okay. We have our cash account. See, what is the total of both the sides? We will check that. Debit side is a total of 60,000. That means cash came in 60,000 rupees. And how much we have spent it? We have spent 10,000 rupees. So how much is the cash left with the proprietor? What is the balance amount? 60,000 minus 10,000. That would be 50,000 rupees. Let me use the black color for this so that you can easily bifurcate between all this. By balance carried down. We will write by balance carried down. Where it is carried down, it will be carried down to the next year. Okay, so we have a balance of 50,000, and that is the reason both sides will tell. The total of both sides should always be same. So there might be a case where if you have 60,000 on your debit, and let's say instead of 10,000, you have 70,000. Obviously, in cash account, it is not possible to have a negative cash. But let's take an example, hypothetical one. If you have a credit of 70,000 that you have given the cash of 70,000, but you already had 60,000, so your balance would have come over here. That is to balance carried down. Okay, that is the treatment which we need to do. But obviously, that is a hypothetical situation, not applicable in case of your cash account, not logical also. So now what should we do? You have to remember that whichever side balance is higher, that will be the total on the downside. That will be the total on downside, and the balance will come on the remaining part. Let's see here. Here you have nothing on the debit side in the capital account because capital account is a credit item. There is nothing on the debit side. So whatever is on the credit side, I will do a total that is 4 lakh rupees is the total. And I will mention as to balance carried down 4 lakh. This is the balancing figure. Here B/F represents the balancing figure, not boyfriend. OK, so here balancing figure would be 4 lakhs. When we are doing this balancing, this will be done when we are closing the books of account. So we are closing the books of account on 31st of December 23. Books of accounts are being closed on 31st of December 2023. And here also we will mention the date as 31st of December 23. You will do all the balances at the period close. Period will close at 31st of December. OK, moving on. What we are doing, we are doing just balancing our accounts. OK, we are just balancing our account. Let's see how we are balancing it. Now we have bank account. Bank account, see, on the debit side, we have total of 1 lakh rupees. On the credit side, I have a total of 20,000 rupees. So obviously 1 lakh is greater than 20,000. So total would be how much? 1 lakh. Now which side is short? So the credit side is short. So here I will write the balance amount 80,000 by balance carried down. That is the balancing figure BF. OK. Am I clear, everyone? Any doubt? No. OK, great. Moving on. Then we have our furniture. Let's see what we do with furniture. We have only debit side of 40,000. Nothing on the credit. So total would be obviously 40,000. And on 31st of December 23, we will do by balance carried down. That is 40,000 rupees. OK. In the next year, what will happen? This balance is being carried down in the next year. When you will open the books on 1st of January 2024, you will do to balance brought down. This brought down means what? It has been brought down from the previous year and the balance would be 40,000. That would be the entry for the next year. But right now we are closing the books, so we are not doing the entry for the coming year. Am I clear, everyone? OK, moving on. Then we have land and building. We have a Debit balance of how much? 2 lakh rupees. Nothing on the credit, so I will have a credit balance here. Credit balance means what? By balance carried down 2 lakh. 31st of December 23. This will be my balance carried down. Then we have purchases account. Now everybody remember, now you have to do some different treatment for the profit and loss items and trading items. Now you need to understand what are the profit and loss items and what are the trading items. Okay, let us take a separate note. So let us see what are trading and profit and loss account looks like. So we will mention a heading that is trading and P&L account. First thing, this will be for the period ended 31st of December 2023. Trading and P&L account is for the period ended 31st of December 2023. So next year means what? Next year means obviously the day after the closing date, 31st of December is the last day. Then we will have the next year of 1st of January 2024, 1st of January, because here we are using the calendar year as the financial year. Okay, we are using the calendar year as the financial year. So books is closing on 31st of December. Then the books will reopen on 1st of January. If I say the books are closing on 31st of March, then the next book will open on 1st of April 2024. Am I clear now? Okay. So what is the format for trading and P&L account? Here you will have again the same debit side as well as your credit side. You will have debit side and credit side. First line is for your headings. It would be particulars, and then you have the amount in rupees. Then the same thing, particulars and amount in rupees. So now you will have two parts. First will be your trading account. All the items which are relating to the trading account will come on the trading account on the top, and then all the P&L items will come on the bottom. So what are the trading account and what are the P&L account? So trading is generally what you are doing the business for. If you have purchased the goods, obviously you are going to sell that goods. You are doing the business of those goods. So everything relating to your goods, that would be coming under trading. So what if we are doing the services business? I am providing a service. I am a doctor. I do not deal in goods. I do not sell the medicines. I just write a prescription on a piece of paper and I take 500 rupees from my client. So was the paper of 500 rupees? Was the paper cost 500 rupees? The answer is no. Paper is of just less than 1 rupee. But I am charging 500 from my client. What is that 500 is for? That is the prescription. That is the advice which I have given to the patient so that he can cure himself over a period of time. So that is the consultancy. That is not a trading business. So in that case, there will be no trading account prepared. So keep in mind, trading account will only be prepared for the businesses which have goods. So they will purchase the goods, they will sell the goods. That is the transactions which will be taking place. So as I said, on the top, we will have the trading account. So if there is any opening stock, we will mention it over here. I'm just giving you the format of your trading and P&L account. To opening stock, then we have two purchases account. Whatever is being purchased, we will write it over here. And if I have purchased anything and returned it back, there is a purchase return. I will deduct it. Because if I purchased for 10,000 rupees and I have returned the goods worth rupees 2,000. So net purchases is only 8,000. So I will deduct the purchase return. And whatever figure is coming here, I will write over in the amount column. So we have the opening stock on the debit side. We have the purchases on the debit side and all the direct expenses. Sir, what do you mean by the direct expenses? For example, there are two major direct expenses which come across, that is called freight inwards. What do you mean by freight? Freight means the amount we have paid to the transporter for bringing the goods from the supplier's factory to my factory. Okay, freight which has been paid for bringing the goods from supplier's factory to my factory. That is the freight inwards. So any cost which is associated with the directly attributable to the goods purchased will form the part of your trading account. That is the freight inward. Second thing will be here wages. That is the direct wages. So I have some workers in my factory who will process that goods finished product, who will process the raw material into the finished product. Let's say I make cloth. I make cloth out of the thread. So I purchase the thread. My workers that transform the thread into a cloth by use of some machine. So whatever wages I am paying them, not the salary, I'm just talking about the wages that is directly on the goods. So those wages will also be your part of your trading account. So all those things which are related to goods that will form part of your trading account. So see, we have put the opening stock, then the purchases, we have deducted the purchase return. We have direct expenses, which will include your freight inwards as well as direct wages. OK, now next we have your sales balances. If you have sold anything, so the balance will be mentioned over here by sales account. What do you mean by sales account? Whatever sales has been done in the whole period will be mentioned over here. But if there is any sales return, for example, I have purchased anything and then any sales has been returned, the goods has been returned. So I will deduct it from the sales figure and I will write a net figure on the amount column. OK, so do we need to write down this format? Yes, obviously you can write it down. That would be helpful. And obviously it is also given in your books, but anything which is written by your hand, that will be in your mind. So try to write it down whenever I'm explaining you. OK, so by sales account, we have mentioned sales return we have deducted. And lastly, if there is any closing stock left out, if there is any closing stock which is left out, so you will write it on the credit side. So why it is right? We are writing on the credit side because it will credit from your trading account. This has not been used in this year. This will be used in the next year. So by crediting here, we will show it on the balance sheet on the asset side. We will show on the balance sheet under your assets. OK, so now what you will do? We will do the totals. We will do the totals. So these are all your expenses. Here you have all your income. OK, on the right credit side, you have all your income. And on the left hand side, you have the expenses. So if your expenses is higher, expenses are higher. Let's say your your income is higher. Let's say your income is 1 lakh rupees. Hypothetically, I'm saying that let's say it is 1 lakh rupees and total of your expenses are coming to be, let's say 80,000 rupees. So 20,000 remaining would be the gross profit. It will be the gross profit which will be carried down to your P&L account. It will be carried down to the P&L account below. And from here, whenever the gross profit comes, we will write the gross profit brought down. it would be 20,000. So it will come from there to here. Okay, whatever is the gross profit, it will go to your P&L account. That this is the remaining profit. I have earned an income of 1 lakh rupees. I have a total expenses of 80,000. So from business, I have made a gross profit of 20,000. That gross profit would be brought down and we will write all the other expenses. For example, salary. For example, electricity. For example, any other expenses that will be marked here. And whatever balance is left, that will be net profit. And what we will do for this net profit? It will be transferred to your capital account. This net profit will be transferred to your capital account. That is the last step of your profit and loss account. Sir, what if we have some other income? For example, interest is earned, where we will write it. So we will write it on the credit side. Because obviously your rule, accounting rule, what it says, debit all expenses and losses, credit all gains and income. So for example, if you have earned any interest, by interest received, that you will mention over here. If you have received any rent, you are a landlord, so there would be rental income. So by rent received, everything will come on the right. And then you have to do the total again. Okay, we will do the this one. So whether there will be only 2 direct expenses, mostly there are only 2 direct expenses, but if there is any other thing, I will highlight you when we are solving the questions. And what if we have a company who provides, there is one question which I have received, that what if we have a company who provides manpower supply? So what kind of account they prepare? So manpower supply is a service. They won't prepare the trading account. They're not dealing in goods because they are supplying the manpower. So this whole trading account won't be coming over there. They will directly prepare the P&L account, profit and loss account. Okay. Now, what happens if this is reverse? What happens if this is reverse? What do you mean if this is reverse? For example, the income is less. The income is less and the expenses are higher. That means on your trading account, you have all these expenses. Let's say the total of these expenses is 1 lakh rupees. And you have just sales of rupees, how much? 80,000. 80,000. So what will happen? You will have a loss. But sir, you said that you will write the total, whichever is higher. So total will be 1 lakh only. Total would be 1 lakh only on the both sides. And now the balance will come here. So here on the left side, we had the gross profit. Here we will have the gross loss account, which will be again carried down, and then it will be transferred to your P&L. So here it would be to gross loss brought down. So this is the case where we will have a loss. This will be the case where we have a loss. Okay, note it down, everyone. Same way here also. If we have a net profit, here it will come. But if we have a net loss, so it will appear over here. Your total will always and always match with the balances which are mentioned here. Everybody note this down.